Peace and love, good people, peace and love. We are back at the open with another SPX trade. We got artificial intelligence standing in for me today. We got some loud kids in the house and I can't narrate my trades in peace. So we have an alternative solution with this one. Pre-market data is impacting my moving averages in a negative way, so I'm going to turn it off. I waited too long to enter this trade. I was so worried about losing money after that last trade that I played the game too cautiously today, and that mentality kept my gains small. But I was green nonetheless. 2 back-to-back trades. Pay attention to the time I enter the candles. I need to work on waiting for the candles to close before entering the position. I'm being tempted by the possibility of a reversal on this trade. It is always so hard to predict the bottom. It looks like a reversal pattern is forming, but it is showing a doji candle on the 2-minute time frame, but a tail bar is forming on the higher time frames. I am concerned the tail bar on the higher time frames will turn into a doji candle as well. If we consider the distance of the trend down and the point at which we are considering a reversal, it may be slightly too early for a reversal to happen.
Seeing on a 15-minute time frame, it looks like the pin bar is turning into a doji candle. So we gotta tread lightly with that. We must tread lightly with that one right there. All right, so that's like, see, this is where you wait too long to get in. Or you can look at this like the first pullback, or, the first closed pullback, because it looks like there's a pullback right above that last candle to the left on a 5-minute time frame, right at the 200 period moving average. That long wick was in fact a pullback. That was in fact a pullback. It opened, went all the way up there, and then came down. So now on this candle here, it's coming to the support. Are we going to break through support, or are we going to bounce off of support? All right, so we broke through support, and we also simultaneously took out the bottom of this green candle. But we have to tread lightly with our entry. We have to tread lightly with our entry point. Should we wait for this candle to close, or should we enter it ahead of time? Put your answer in the comment section. Let me know if you would have waited for this candle to close before entering this trade, or if you would have been willing to enter at this point when it passes through the support level and takes out the bottom of the green candle body on the tail bar to the left. So that's what we're trying to see. What would have happened? What would have happened? Okay, now it looks like we're going back in the other direction, but again, so what would you have done? Would that have been too early? Or you think it's better to wait for the candle to close? What do you think is the best course of action? Right now, it looks like we are moving up. But again, if this was a true reversal, we would be taking out at least half of this red bar. But it wicked up. Now it's a continuation to the downside. And we are waiting to see if it is going to take out this candle. That's why a lot of times we like that 2-minute time frame. This 5 minutes is a lot of time to get crossed up. It's a whole lot of time. So should we be anticipating or waiting for confirmation? All right, boom, I jumped in now. So I did not wait for confirmation. I jumped in with it. I jumped in 2 minutes and 20 seconds after the 5-minute candle opened. All right, so there's a lot of time for this thing to go against me right now. A lot of time for this thing to go against me. All right, and this is why you see that I am starting to get a negative P&L in the red. Now we're positive, but I did not wait until the candle closed and that cost me a lot of anxiety. That caused me some anxiety. Maybe I should have waited until this candle closed here and then entered the trade. That's what I should have done. I should have waited for the candle to close and then entered the trade. All right. Lucky for me, it did not go against me. Lucky for me, it did not go against me because this stock is extremely volatile. All right. So much so. Look at that. Look at that. A big wick. Now I'm down 35, 40, down 30, down 35, down 40. What did I do wrong? I jumped in. I entered a 5-minute candle 2 minutes and 20 seconds after it opened. So I gave it more than half of its window to go against me, opposed to waiting for at least 4 minutes. Like I could have waited till now to enter. I could have waited till this point to enter. I could wait till it's about 30 seconds left. I could wait for about 10. Look at that. I'm down 60, down 55. Because why? Because I jumped into a 5-minute candle 2 minutes after it opened. That's not how we do things. All right. Now we're learning that we might want to wait for the candle to close on a larger candle, a larger time frame. The 2-minute candle, if we're basing our moves off of that, we might be able to make a decision. Maybe that 2-minute candle on the 2-minute time frame would have told us something different. But we got $30 out of that entry. All right, $30 out of that entry, and we got out the trade. $30 out of that entry, and we got out the trade. Boom. So we basically entered and exited on one candle. All right. So we entered and exited on one candle. We could have waited for it to close and entered on this candle here. Right. This might have been a better candle to enter the trade on. So I got back in the trade on this candle. All that anxiety from that last candle worked me up. I snatched at my profits. Then I jumped right back in. And then I got in again 5 seconds into a 5-minute candle. Whose man's is this? Okay. I'm realizing that subtle detail, those subtle nuances can really impact my trading. And that creates a more of a gambling sense. Okay. So this particular candle, if we're looking at the high and low of the first 5-minute candle, all right, then this would have been the first pullback. But we have another candle that has broken through this low. So this may be the high and low of the first 15-minute candle. I mean, the low of the first 15-minute candle is this resistance that's above us. And we had a candle close below it, and then we had a second candle open below that, looking like we were moving down. Now we're wicking back up, down 60 on this trade. Why are we down 60 on one trade, on one candle? Because we're trading SPX instead of SPY. So we can trade the same chart pattern and take less of a risk with SPY, you know. But we're doing SPX because the bigger the risk, the bigger the reward. In our case, it seems to be the faster the reward. It might kick us our profits a little faster, but it's going against us so fast that we got to snatch out our profits. We got to snatch at the profits instead of letting the pattern run. And that's a lack of confidence in your trading strategy. So we got to work on that. Here we go. Negative. Okay, now we back up. Up 25, up 30. We had to click 30. They got us out with $20. So we got out of this trade early, but it continued to the downside. All right. So peace and love, and I hope you get rich. Subscribe. Don't forget to leave a like and a comment below. Catch you in the next video.